Leiderman?
Yeah, I will.
Okay, so should I move to the next page?
No, wait. First of all, I would like to say good morning, everyone. So I'm Tomer Dubrovsky, and today the question we would like to try to answer is why to invest in Mexico. And of course, Mexican food is the best, and the Mexican beaches are amazing, but we would try to look more carefully into the macro and political issues and take an investment decision, hopefully better than Teva took. And things are changing so fast. I just opened the day with Bloomberg in the morning before class, and I saw that actually Fitch downgraded the rate on Mexico. I'll talk about it a bit more later on. You can go to the next slide. So does Mexico offer an ideal investment opportunity? Let's do a short executive summary. So first of all, since the corona shock affected economic worldwide, finding a vaccine and faster economic recovery will support the financial system. For sure, Mexico will benefit from it. We know that the wages are relatively low, which is quite good for a retailer. Mexico also has incentive for foreign businesses, especially manufacturing, if we would like to manufacture there. So, for example, zero rate and added tax on export. We know that we have the CU SMA, which we call the new NAFTA trade agreement, as you just mentioned before. And it's a very important thing for Canada, but also for Mexico. Mexico is close to the US and Canada, and it's an ideal hub for North America trade. The trend of leaving China is here. Actually, Fitch today upgraded China, but still we're seeing the diversification of companies. So if we're looking to alternatives to China, Mexico can be a good one. Main point that we'll discuss more deeply later, but it's the political issue, and political is a big issue. Investors lost their confidence in Mexico because of this issue, and we would not invest in Mexico because of this point. However, when looking at the CDS compared to the credit rating market price in risk. So therefore, Mexico bond is more attractive in our opinion than the retail, and even carry trade is interesting. So let's dig into Mexico. So we're talking geographic. Mexico has a border with the US in the north, Guatemala and Belize. They have the oceans in the side, and the Gulf of Mexico, which is very important because of the oil and gas industry. Demographic, we're talking about population of 126 million. It's the 10th most populated country in the world. We're also talking about developing country with a GDP per capita of $9,673, with main industry like the main industries are food, tobacco, petroleum, textile, automobile, and more commodities. The private consumption is very high and important for Mexico growth. But still, Mexico is a very oriented economic with strong foreign currency reserve. And we're talking about the currency we're talking is the Mexico peso. We know that the labor productivity growth is negative year over year, which is not that good. We know that the unemployment is 3.38%, which is not so high. 7.03% youth unemployment, which is a high number. And the debt to GDP is relatively low, is 45.5. That's a nice number. So let's go to the second slide, please. Now, since we're in the middle of the corona crisis, we would like to look at the previous 2008 crisis and try to learn from it. And we can see that the crisis impacted Mexico in two significant ways. First is the drop in export and deterioration in its term of trade. And the second is the constrained access to international financial markets. And we saw the difficulty of borrowing and foreign investment running away. That's lead to currency depreciation as the crisis many crises we saw in the past. The liquidity shrank significant in this market, and the unemployment wasn't high during the crisis, but it started to increase in 2009 to 5.36 from around 3%. The debt to GDP didn't rocket high also during the crisis, but again, in 2009 it was almost 50% higher than 2008. So it went from 21 to 31. And as we can see in the right chart, the GDP fell sharply during the crisis. Now, you can go to the next slide. So the oil revenue, the country oil revenue fell, which is very important to Mexico, and raised concern about the sustainability of the fiscal policy in terms of growth, current account, the deficit. The economic had to adjust to a new external environment and characterized by low foreign currency revenue and limited access to external borrowing. And as we can see, inflation decreased very sharply in the right chart.
Let's move on.
Yeah, let's move to the next one. Now, in order to get a better perspective, we can look at the BMV index, which presents the biggest company in Mexico. We can see that the downturn during 2008 was 44%, and it's only fell 8.1% down because of the corona crisis. However, it was 32.5% lower from the peak of 2018. But it's still impressive that the downturn was not big. And the way to explain it, I believe, is the depreciation in the peso, which support the market. Next slide, here we can see a bit of the macro aspect over the corona crisis. So we can see that the debt to GDP increased. The S&P rating was triple B, downgraded by Fitch. And as I said today in the morning, it downgraded it to triple B minus, lower than the investment grade, and actually upgrade China. Yeah, it's interesting. Interest rate, we saw four cuts of the Mexico Central Bank. Every cut was 50 basis points. Now it's 5%. Inflation rate went up. Unemployment actually went down a bit, but not a lot. Exchange rate, we saw again the depreciation of the peso, and we saw a quantity easing purchase security and support liquidity of $750 billion. It's like 3.3% of the GDP. That's nice. The next slide. Now, until now, we talked basically about the present and the past. So let's go a bit about the future and the forward outlook. So again, the unemployment rate supposed to increase, inflation rate supposed to increase, interest rate supposed to go lower to 4.75% in 2021, and the government debt to GDP is supposed to increase sharply, but also 58%. That's not that high in our opinion. So that's the forward looking. Now, in this slide, we're kind of going to say why we're not going to invest in Mexico as a retailer, and what's the risk. So first of all, the coronavirus kept the uncertainty very, very high. And yes, we're talking about 28,000 deaths. It's less than Brazil, but I mean, it's almost half than in Brazil, but it's still high, and there is no end in sight. And we saw that the unemployment rate increased, the debt to GDP increased and supposed to increase more. The average household is very low. We don't know how they're going to manage the crisis. We see that the oil prices are not that high, actually a bit low. demand shock. So Mexico is export-oriented economy, and the world demand is decreasing. Exchange rate also is not a good, I mean, it can be a problem and more uncertainty. We know that the tax in Mexico is 30% corporate tax rate, which is quite high compared to other places. We know that there is a lot of cases of violence, which business are afraid from, and the main issue is the political threat. It's all started in 2018 when we saw a cancellation of the $3 billion airport project. And we can actually say that the current president of Mexico is very anti-market and anti-business. And there also the water supply permit would not be granted. That's the consolidation grant to build the brewery. That was actually from this year. It's the March 2020, which you can see. And also new electricity market rule, meaning government are taking more and more control over businesses. More risk is the electricity price if we're gonna manufacture there. And investor confidence investor confidence is very, very low, and I'll talk about it a bit more. We know that Mexico, in our opinion, will have deep contraction and shallow recovery on the back of weak investor and confidence and very limited fiscal policy response from what we see. However, we don't see a solvency problem in the mid to near term. As we say, the debt to GDP is quite low and some other aspects. Now, yeah, perfect. So now, after looking at the macro side, we're asking ourselves, how big is the Mexico problem? And now, regarding the political issue that I mentioned, I want to share with you interesting results from a survey of the Central Bank of Mexico, which presents the answer to the question, do you consider this as a good time for businesses to invest in Mexico? And as we can see here, more than 90% believe it's a bad time. Let's go to the next slide. So is there an opportunity? The answer is yes. So there are incentives for foreign businesses in Mexico. There are companies who are planning to bring production closer to the end consumer, which is great for a company that wants to be closer to Canada and the US, because Mexico located very close. We know that the weak currency also make manufacturing costs more appealing. The new CUSMA agreement will be very good for Mexico, and Mexico benefit from skilled workers, workforce, and has relative young population, which is very good. And the household consumption expenditure grew like 2.2% year over year. Now, let's go to the next slide, and we'll make the conclusion. So, as we said, as a retail, we would not invest in Mexico. However, as we mentioned before, we don't believe that Mexico will have solvency problem. The debt to GDP is low, and we actually think that the Corona crisis is an opportunity to increase a little bit the debt, to invest as a country in infrastructure and some interesting investment that can improve the productivity with lower rate, and to try to move forward. And in the following model, the model that we saw in class, we try to take it to use relative updated number, and we can see that the market price in high risk. Hence, if we are right and we think that Mexico going to improve, investing in government bond with around 5% is more attractive than going into retail, in our opinion. Thank you.
Okay. Thanks very much, Tomer. Very interesting. I think you can update the graph on the model to put the triple B minus you indicated of this morning. So Mexico becomes pretty much like Colombia, and it will be interesting to see, you said it came this morning, to see whether the spreads today are going to change. And as we saw, there are many instances in which a rating agency is taking action and it's not having any impact because on the market, because it was already taken into account there. I just want to add 2 or 3 points. One is really what Tomer has indicated, that as the issue of violence is very, very important. It's a problem in all Latin America, and especially in the big cities. But we are talking about the problem of vandalism, internal violence, and you have in Mexico probably a drug cartel that is very violent, and so on and so forth. And yes, business people are very, very afraid. And when they send their children to school, they go with a bodyguard. And when they drive their cars to their offices, they are probably also with a bodyguard, and so on and so forth. So it's a situation that has been deteriorating. The issue of the current president, as you said, it's also a problem, because the business climate is very bad, and business people feel it, and you never know what's going to be the next decision. They were going to, as you indicated, they were going to construct an airport, a new modern airport for Mexico, and this president, in a surprise, and there was already some construction on the way, so it was not just something on paper. It was already becoming a reality, and the guys stopped it because the companies that are constructing these are foreign companies, and he said, I'm going to devote more money to other issues rather than this one. So this has been a very, very bad decision. One last thing that maybe I should have mentioned in my comments to your first draft is that you mentioned very low unemployment figures, but it's not clear by how much we should trust these figures in general terms. But there is again another thing that characterizes Mexico and Brazil, Argentina, and you have a very large informal sector in the economy. So, for example, you have street vendors. You have people that maybe have a little, some small position in one place, but then they drive a taxi in the afternoon, and so on and so forth. So the informal economy is a huge issue. These people are not registered. So when there is a crisis and there is unemployment and there is poverty, nobody knows where they are. This is not recorded. But of course, they can be part of the violence and so on and so forth. So, yes, I completely agree.
I just wanted to add that the downgraded today by Fitch came as a company called Grupo FAMSA. It's a retail company, and they failed to pay their debts, or their short-term debts.
Okay. So I think, I guess I completely agree with your assessment that if to invest in Mexico, do it from far away, through financial instruments, and in the meantime, not to get